Assalamualaikum and good day everyone. Today we will presenting on the topic threats in digital banking, fraud, phishing and compliance issues. And our members are Maisarah Asyrafi, FARAH ADILAH, MIZA FATINI, Nur Alia KHAIRINA and myself ALIYAH AFIQAH. Digital banking has become a major part of daily life, allowing people to check balance, transfer money, make payments and manage their finance anytime and anywhere. As banking becomes increasingly digital, it brings a lot of convenience, but it also opens the door to new cybersecurity threats. One of the biggest threats in fraud, where criminals use stolen information or fake identities to access accounts to perform illegal transactions. Another common threat is phishing, where attackers trick users through fake emails, messages, or websites to steal password or banking details. These attacks are becoming more advanced and harder to detect. Besides frauds and phishing, banks also face compliance issues. This means they must follow strict regulations to protect customer data, ensure secure transaction, and prevent money laundering. If banks fail to meet these standards, it can lead to financial losses, legal penalties, and damage to customers' trust. Because digital banking involves sensitive information and real money, strong cybersecurity is more important than ever. Banks must invest in advanced security tools, while customers must stay alert and practice safe online habits.
Next, we have external cybersecurity threats. They refer to attacks that come from outside the organization's internal network. These threats are usually launched by hackers, cyber criminal groups, or sometimes even state-sponsored attackers. In digital banking, these threats target customers and financial systems with the goal of stealing information, gaining unauthorized access, or disrupting services. There are four major types of external cyber threats that I will highlight. Firstly is the phishing and smishing. They use fake emails or SMS messages to impersonate banks and trick customers into clicking links or providing login details. These usually create a sense of urgency, such as telling the customer that their account has an issue. Next is malware and ransomware. They involve malicious software that steals data or encrypts system. Keyloggers can capture banking credentials, while ransomware can shut down internal systems entirely. Next, we have account takeover fraud, which occurs when attackers use stolen or reused credentials to log into a customer's banking account. Once they get in, they change the password as they like and contact details and quickly transfer funds to mule accounts. Meanwhile, we have the last one, DDoS attacks. They refer to distributed denial of service. It overwhelms banking servers by floating them with massive traffic, causing websites and apps to crash. These attacks sometimes act as a distraction while other fraudulent activities take place. So, as we know, these cyber threats lead to significant impacts on digital banking. The first is financial impact, of course. Banks may suffer losses due to fraud, compensation to affected customers, recovery and system repair costs, and even potential regulatory penalties. Next is the reputational impact. When attacks occur, banks often receive negative media coverage. Customers may begin to perceive the bank as unsafe or unreliable, which affects overall credibility. There is also a major operational impact. Cyber attacks can disrupt online banking services, cause downtime, and halt critical transactions. This affects both customers and internal banking processes. Another important impact is on customer trust, of course. When attacks happen frequently or cause widespread losses, customers may lose confidence in digital banking channels. Some may even hesitate to use online platforms or depend more on physical branches. Overall, these impacts show how external cyber threats can damage a digital bank not only financially, but also in terms of reliability and long-term customer relationships.
Now we move to the next part, which is internet threats in digital banking. So what are the internet threats? It occurs when individuals inside the organization, such as employee, contractor, or third-party vendors, misuse their access to the system, either intentionally or unintentionally. These threats are more difficult to detect than external attack because insiders already have authorized access and understand the system structure and security control. There are four key types of internal threats. The first one is malicious insiders. These individuals intentionally misuse their access to commit fraud, steal customer data, or sabotage system for personal benefit. Second, negligent employees. These are unintentional threats where employees accidentally expose sensitive data through careless actions such as clicking phishing emails, poor password handling, or system misconfiguration. Third, data misuse or policy violation. This occurs when employee or contractor access or share data without permission, violating company policies or law like Personal Data Protection Act (PDPA). And lastly, credential theft. In this case, attackers steal valid login credentials and use them to act as legitimate insiders, making it very difficult to detect and trace the breach. Now we look at the impact of internal cybersecurity threats that can lead to serious consequences for digital banking institutions. From a financial perspective, banks may suffer direct losses due to the fraud, data theft, or heavy compliance fines. Then for reputation, any breach can lead to a loss of customer trust, negative media exposure, which can damage the bank credibility in the long term. In the term of operational, internal attacks may disrupt services, cause the system downtime, and affect the availability of critical banking functions. Then there are also compliance impact, especially if the breach violates regulation such as PDPA, RMIT, ISO 27001 or GDPR. And lastly, from a legal and social perspective, the organization may face lawsuit, legal penalties, and internal disciplinary actions.
Next, I will be presenting on cybersecurity frameworks and data protection principles in the context of digital banking. The first one is ISO 27001, which is globally recognized standard for an information security management system. Under ISO 27001, organization must establish an ISMS that manage policies, risk assessment, operational controls, and also continuous improvement. For bank, this is very important as it helps to protect confidentiality, integrity, and also availability. Next one is PCI DSS, which is compulsory for any institution handling cardholder data. Digital banking relies heavily on online payments, so complying with PCI DSS is critical to ensure that card payment remain safe and protect customers from fraud. Last one is RMIT, which is Risk Management in Technology by Bank Negara, is one of the most important cybersecurity guidelines for Malaysian financial institutions. For digital banking, following RMIT is mandatory to ensure that the system used in Malaysia remains safe and resilient. By following these frameworks, it helps strengthen security, protect client data, and maintain trust in digital financial services. Next, the CIA represents the core principles of information security. Confidentiality ensures that sensitive data only accessible to authorized personnel. Bank maintain confidentiality through strict access control, encryption, and also authentication. Second one, integrity ensures that data remains accurate and has not been altered. This is maintained using audit logs, documentation, and control system permissions. Lastly, availability ensures that banking system and services can be accessed whenever needed. Since digital banking runs online, downtime can heavily affect customers, so banks rely on backups and disaster recovery system to ensure availability. Finally, the PPT frameworks integrates people, process, and technology. Firstly, people. Employees must receive security awareness training and follow safe practices to avoid mistakes. Secondly, process. Include the policies and procedures that the bank follow to manage risks such as access policies, compliance requirements, and incident response. Lastly, technology, which involve the tool used to enforce protection, such as authentication system, monitoring tools, and firewalls. Together, the CIA and PPT model create a strong foundation for cybersecurity in digital banking.
Next, we explain about the RMIT controls and best practice that help strengthen digital banking security in Malaysia. These points are based on the information presented in a panel 2 and the requirements set by Bank Negara Malaysia. The shift towards digital banking has made financial institutions heavily dependent on technology. Panel 2 clearly highlighted that the most valuable asset in the modern banking environment is information. This includes customer identification, account details, and transaction history. Bank Negara Malaysia introduced the risk management in technology framework to ensure that financial institutions manage these risks responsibly. The framework provides clear direction on how banks can protect customer information and maintain secure operations. The first control is access management. This ensures that only authorized individuals are permitted to use or modify sensitive information. By limiting access and using strong identifier verification methods, banks can prevent information misuse. The second control is awareness training. Employees and customers often becomes targets of phishing and social engineering. Continuous training helps them recognize threats and avoid unsafe behavior. The third control is third-party management. Financial institutions rely on service providers for cloud service and payment system. Weakness in any vendors can expose the entire organizations. This is why RMIT requires regular assessment and monitoring of all service providers. Next is incident management. This control provides a structured plan for responding to security incident. It supports fast action, clear reporting, and effective recovery. The next group of control focus more on technology. Cryptography protects sensitive data by making it unreadable to anyone who shouldn't see it. The secure software development life cycle makes sure security is built into application from the very beginning. Patch management helps the bank fix known vulnerabilities before attackers take advantage of them, and backup and restore processes ensure that the bank can recover quickly from things like system failures, ransomware attacks, or data corruption using secure and tested backup copies. RMIT also introduced controls that help banks stay continuously protected. Change management ensures that the system updates or new implementation are tested and approved before going live, reducing the chance of new problems. Vulnerability assessment and penetration testing, or VAPT, helps banks find weaknesses and test how easily attackers could exploit them. Network security protects the bank's infrastructures by controlling traffic, using firewalls, and detecting abnormal activity. Finally, compliance ensures that all MRT requirements are followed consistently through audit and documentation so the bank can show accountability and proper governance. Next, for best practice in digital banking security, the seminar highlighted the importance of combining people, process, and technology. Continuous training is necessary because it helps both staff and customers understand the type of risk they may face. Clear operational procedures make daily system activities safer and more consistent. Strong technical controls such as encryption and authentication helps protect sensitive information and systems. Good oversight of service providers is also important as banks rely on many external vendors. Finally, continuous monitoring allows the banks to detect unusual activity early before it becomes a serious problem. Finally, the last one is conclusion. The overall findings from all sections of this report show that digital banking continues to grow rapidly and bring both benefits and significant risks. A strong understanding of digital banking concepts, associated threats, real-world cases, and the RMIT framework is essential for protecting users and maintaining secure financial operations in Malaysia. Each section highlights the need for safe technology use, informed customer behavior, strong organization controls, and effective regulatory guidance. Together, these elements support safer digital banking practice, reduce weaknesses, and promote long-term trust and stability in the financial system. That's all from us. Thank you.